Hello, everybody. Welcome to the Fundamental Analysis webinar this evening. My name is Troy. I'll be presenting for AvaTrade. Before we get going, let's do a quick systems check just to make sure everything's up and running fine. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. Thank you. I've got enough responses. Looks like we're up and running fine. So it's been an interesting day, especially if you are trading on maybe gold or oil or some of the major indices. So we'll take a look at those major movers today. We'll talk first a bit about the fundamentals behind why they were moving so much today and bringing really some great opportunities that I hope some of you took advantage of. As we get going, keep in mind, all investments obviously have risk. You want to manage your risk in a way that makes sense for you. If you were in the wrong direction, for example, today on some of those assets, hopefully you had your exposures kind of capped at an acceptable level for your balance and for your risk tolerance. Whether you're using stop losses, hedge positions, or maybe AvaProtect, which is a feature that's available when you use our web trader platform or the AvaTrade Go mobile app to protect against losses. In some manner, it makes sense to risk manage and make sure that you're capping the losses at a level that makes sense for you and your balance. Now, with that said, that no one trade is guaranteed to bring profits, and obviously they all have risk. Also, we understand that every single trade does have a good potential for profit, which is why we're all here. So the idea is to find ways to more consistently bring those potential profits into play and limit those opportunities that maybe turn bad and bring those potential losses into play. So, as we move forward, the idea here is not to have financial advisement or something from the webinars, but to learn from an educational perspective some ideas, some tools that hopefully will improve upon your results as we go along. Now, what is fundamental analysis? For those of you who are new to trading, I know we get a number of traders that are experienced in the webinars and also a number of folks who are brand new to things and really are just trying to gain a basic understanding of how things work. So we're going to cover some ideas that are okay for both. So if you're an experienced trader, not to worry, we'll go over some ideas and things that I think will be very helpful for you. And if you're new to things, also don't worry, we keep things basic enough that I think you'll understand everything as we go through. And please feel free to ask questions as we go along. I think it's helpful to get input as well, not just questions, from those of you who are attending, to give ideas, give input, to share, or to ask questions that others might be thinking or not know to ask, but it could be helpful to hear the explanation. Now, before we get into what the fundamental news is today, the basic idea about fundamental analysis is there are two basic types: regular economic events. Thank you, Amir. I hope you're doing well as well. One type of fundamental news would be regular economic events, those such as unemployment figures that come out, factory production numbers, these sorts of events that are scheduled. We know what they'll be, exactly when they'll be. They're on the economic schedule, and they certainly play a role with moving the markets when better than expected or worse than expected numbers come out on those scheduled economic announcements. And we'll take a look at some today. The flow was actually positive today on most of the announcements that came out, especially out of the European Union. So we'll take a look at that. And then other types of extraordinary economic events would be, the extraordinary kind of fundamental news would be like we saw today with, news about the vaccines bringing more and more positive outlook to what the growth will be maybe moving into next year and going through 2021. There was a lot of optimism today with renewed confidence in the vaccines that are coming out for this COVID virus. So that headline, you just don't know when headlines like that will break, when articles break about positive news stories that bring momentum, and you can be ready for them. Yes, Yassine, fundamental analysis are economic events, exactly. Some scheduled, some unscheduled, like breaking headlines, whether in the past it was about Brexit. You didn't know every other day what the next headline was going to be, positive or negative for the pound or for the markets in general. And it's the same idea now with the Trump transition, moving towards Biden and his staff that he's assembling, putting together to what looks like take over the presidency, barring any dramatic court decisions about fraud or anything in the elections. It looks like Biden will be taking over, and he picked Janet Yellen today for part of his cabinet, who has certain financial tendencies that the markets tend to like, and she'll be in a key position in his administration making decisions. And so those types of headlines, you just don't know when they're going to come. And so when those headlines come, the market moves, right? When the big stories come, and you can be ready for those with simple pending orders. We'll go over some strategies, some ideas about being ready for the scheduled economic events, the ones you know are coming, and also the fundamental news that you just don't know what it'll be or when it'll be. You just know that it will be. Something will come. Almost every day, some major headline comes that shakes the market one way or another, and simple pending orders can get you in with the momentum from that type of fundamental news. So let's take a look at a couple things and get an idea. First of all, I want to show you on AvaTrade's main website. If you go to the trading platform options, you'll find AvaTrade Go. I mentioned when we were talking about risk about AvaProtect. It's available on all live accounts. You can protect positions. Those of you that are still on demo accounts, you can't activate AvaProtect on a demo account, but the feature is there once you get your live account up and running, and you will see you can protect against losses for small charges, small premium cost, and any losses you have during the time period you choose would be completely added back. And if you have profits, the profits are yours. So it's a way of protecting for a small charge against losses if they come, and if they don't come and you profit, then the profits are yours. You just have that small premium cost in the beginning. This is an example of a pretty large trade. I don't know why that's in the image. 100 lots. That's a huge position, and it still only was less than $1,000 for coverage. I mean, you could make 10, 100 times, even 1,000 times the profit with a trade size that big, and the premium cost was still less than 1,000. But if you're taking trade sizes like one lot, half a lot, a tenth of a lot, you're going to see premium costs that could be just a few dollars, right? So you don't have to worry about during the coverage period if the movement goes and hits your stop loss. If you use the stop loss instead of the protection, you take the loss, then it goes the right way and you miss the movement. Whereas with the protection, you could put 4 hours protection, 2 days protection, whatever. It could go as far the wrong way. It doesn't matter. You're not losing anything during that time period that it's covered. You can be as patient as you need to be to see if it'll eventually come back the right way, and you're still in on the trade then. If the coverage period ends and it's in the negative, whatever negative floating there is gets added to your account, and the trade can keep running. Or if you get stopped out during the coverage period, it gets added back. Yeah, this is, Natalie, this is for the mobile AvaTrade's app, AvaTrade Go. And by the way, if you do your take profit or stop loss, it calculates it for you, your potential profit, your potential risk. And I'll show you on our web trader platform. It has all the same features. So our web trader platform and AvaTrade Go are built by AvaTrade, and they have this AvaProtect feature and some others that are in the app where it calculates your exposure for you, calculates your potential profit, how much margin you need, all in the order window before you trade. So if you log in here okay, log in from our website, then you're in this platform. And it's just like the mobile app. Whereas, first of all, it's nice, the chart, you can expand, you can go full screen, you can minimize it, you have your favorites list here, you can remove them from your favorites list just by clicking the star, you can add more by going to any asset, most rising on the day. If I say, oh, I want to add dash to my favorites list, so I just click the star, there now the star is highlighted, now I go back to my favorites and there's dash. Okay, very simple to navigate. And let's say you want to look at the Ava Protect feature, and we'll get into the fundamental news here in a minute. For those of you that are wanting to hear it, we will get into it just a second. If I'm putting gold, silver, or any FX pairings, okay, there I just added gold. So now it's in my favorites list, and now it's in my favorites list. And let's say I wanted to buy on gold. Maybe I think, okay, it plunged today. Now I'm ready to buy for whatever reason. I wouldn't just randomly buy on gold. Obviously, I would have a fundamental reason. I would look at the chart and the technical analysis, but let's assume we did that and I'm ready to buy on gold for whatever reason. I might say, oh, I want 10 ounces. I'm going to trade 0.1. And I say, okay, I'm going to put my stop loss. I see a support level down at, 1790. So I'll put my stop loss at 1780, saying, okay, I don't think it'll go below that. And I put my stop loss. Well, look, it tells me how much I'm risking, 262.70. I might look at my balance and say, wow, that's over 10%. I have a balance of about 2,000. I don't want to risk 10% on one move. So maybe I go up and I say, okay, let me lower the trade size. Let me do 7 ounces. Okay, now I'm risking 184 to that stop loss price. You see, it immediately calculates based on my trade size how much I'm risking. And now maybe I lower it down and I say, okay, now I'm down under 100. Maybe I say, okay, I'm willing to risk that much. 7%, 8%, not 20%, right? Or not 10%. So whatever the case may be, you can understand your possible loss right here. It's calculated for you before you buy or sell on the position. Same with the take profit. Maybe I'm saying I want to take profit at 2,000. And I say, okay, look, my possible profit is 582. My possible loss is 77. I could take an attempt like this and be wrong 4 times and win once. And I'm good, right? Yeah, Omar, the AvaTrade Go was rated best Forex mobile app. That was in the slideshow there on my opening slide when we were starting. It's got some great features. It really does. And so these features are in the app as well. This is the Web Trader platform, which you access just from our main website. And the mobile app has all these same features as well. Okay, so what if I say, you know what? I'm afraid it's going to go bad, but I think there's huge volatility. So I also, I want to buy on gold, but I'm afraid it could plunge and I don't know what to do. Okay, Ava Protect. Okay, maybe I put 1 day protection. It only costs me $25 for 1 day, maybe 2 days. Why not? $28. I have 2 days to wait for gold to go back up. And as long as I make more than $28, I covered the cost of the premium. And if gold plunges like it did today and I'm buying, guess what? I don't lose. After 2 days, if it doesn't matter if it's 1,000 in the negative, I get that added back to my account when the protection ends. Then I have to manage the trade after that. But it's a nice feature to have this type of protection as an option, as opposed to just using the traditional stop loss. Okay. Sudeep, we'll take a look at some support and resistance. Good question. How to find that? We'll take a look on the charts here in a moment as we take a look at the movements after we look at the fundamental news. So I just want to show everybody that real quick, not really the main purpose of the webinar. If you want to see fundamental news, this platform is great. You go to Trading Central feature. It's only available on the live accounts, not the demos. The economic calendar shows on the demos, but the advanced features, these are premium features only on live accounts that it costs AvaTrade money to have this premium service added. So it's only on the live accounts, but it really is great. I mean, I can look at analyst views. Look, I have live signals. It shows what breakout move is expected, at what price. Maybe you'd get in and get out. You could set up your pending orders, your market moves based off of these signals. It gives you all the information down here. Our preference, long positions above such and such price. You could put a pending order at that price then, or just above to kick in if it breaks through. This is the expected move if it breaks above that price. So whatever asset you look at here, you have live signals, okay? Available for free. You don't need to pay for your signals, right? They're right here. We can look at fundamental news, market buzz, again through Trading Central for free on all live accounts. Some of you might not even realize this is here. The ones with the biggest bubbles are the biggest movers today. They have the most buzz or news about them. Tesla, we click on it. There's the fundamental news right here. I can read, why is Tesla going up so much today? You click on the article. There it is right in front of you. Takes you to the website. Tesla breaches cap. Tesla's market cap breaches $500 billion as mammoth 2020 rally charges on. If you read the article, they'll probably clue you in. The markets like the fact for Tesla that maybe regulations are coming back on the auto industry with Biden taking over, it looks like, in the US. And that's good for an electric car company, right? If it's going to make manufacturers of, gas burning cars have more regulations, and then those cars become more expensive, well, all of a sudden Tesla looks nicer with their price point. And so you read the articles, you get the news, you understand why the movements are happening, and the information's right there at your fingertips. So really cool features on the WebTrader platform and also on the AvaTrade Go mobile app. And you can go by category, most rising, most falling, stocks, bonds, commodities, etc. Okay. Yassine, it's not a bad question. No, you don't need to have more than one device to trade. One laptop would be enough. Plus, you probably have a phone you could use as a mobile device. You can't log into the same platform on the same account, or I'm sorry, on two different accounts. If you have more than one account, you can't download the MT4 platform, for example, and log in on that one login method on two accounts at once. But you could log in on one account through the MT4 platform. You could log in on another account through the WebTrader or mobile app, etc. But you could function fine just with your laptop. You don't have to use the mobile. Laptop will be able to access the WebTrader that we're looking at here, and also the MT4, MT5 accounts that this trades on. When you trade on the WebTrader or the mobile app, it's on your MT4 and MT5 account. You'll see the trades. If I open a trade here and then I log in through the MT4, there's the trade, and vice versa. Okay. All right, so let's take a look then what's happening in the fundamental news. The Dow broke 30,000 for the first time ever. Okay, another market all-time high for Trump, I guess, to notch on his belt before he leaves office. Some of that momentum maybe wasn't because of Trump. There's now the vaccine, I think, had a lot to do with Trump's policies, getting it done so quick and streamlining the regulations and process to get those developed faster. Obviously, the doctors and everyone else involved had a lot to do with that. But the Biden transition also is kind of mentioned here as to why the Dow broke 30,000. And part of it is the markets like certainty. It isn't so much that they say Biden's better for the markets or Trump's better for the markets. They like certainty. And they like the fact that, okay, he chose a known person for his financial mind with Janet Yellen. She's a known entity. She had that position before, back when Biden was vice president. And so, the markets like certainty, and that helped to bring some certainty with Trump agreeing to start the rollout of the transition towards Biden, and some of these people being named as to who Biden might bring in. And some of the names are familiar to investors, and so that brought some confidence today. I think the markets also like that the Democrats may not gain control of the Senate, because that means they can't raise taxes on corporations so easy, and some of the things that they might want to do. Wall Street and the markets around the world like the idea of understanding the status quo, and right now they like a divided government. They hope that the government stays divided. That's actually good for the markets right now, so that neither side can be too extreme. And so a bit of checks and balances on the system when you have a divided Congress, as it looks like it could be in the US. With that said, keep an eye on the Georgia runoff elections in the US. There are 2 Senate seats up for grab. Nobody won by enough majority, so they redo it with just the top two people for those Senate seats. And if the Democrats win both of those in the US, they will control the Senate and the House and the presidency. And then you could see the markets get spooked. Okay, so as it gets closer to those January runoff elections, be ready for some volatility, especially if it starts to look like the Democrats could pull both those seats. You could see the markets respond pretty strong. Okay, so again, that would bring uncertainty again, right? US consumer confidence slips, but house prices surge. The housing market in the US has been booming ever since the recovery of the markets came through this pandemic. Interest rates have been at an all-time low for obvious reasons to help with this pandemic. And because the interest rates were at an all-time low, people were snatching up houses like crazy in the US. And so house prices have gone up, builders have had a lot of business, etc. So that's actually a positive news story also today on the markets. And if we look here, look, the futures were green all day. The market opened green. Dow Jones above 30,000. The volatility index, which is referred to as sometimes the fear index, the VIX, down almost 3%. That means fear is down. It makes sense the markets are up. It's all positive momentum today. We can see it within 5 seconds of looking at this little snapshot. You know the fundamental news is positive, even if you don't know why it's positive. We've taken a look. We see some reasons why. European Union secures 160 million doses of Moderna's COVID-19 vaccine. Again, positive momentum. That's good news for next year, right? Investors aren't just looking at this week that, okay, the viruses have surged, there's lockdowns again. Okay, there's some fear about that in the short term, but investors are projecting into next year, wow, these vaccines look like they're really going to be able to do the job. And so news like this headline, that brings positive momentum again. So sure, it's going to be a logistics nightmare a little bit, passing out all these doses and getting them to enough people, but the momentum is starting to be there. Investors are seeing the light at the end of the tunnel, and you feel that momentum today. So that's the fundamentals. And look at the announcements today. German business expectations missed the mark a little bit, but look at all of the other announcements. German GDP up more than expected, quarter to quarter. Year to year, down less than expected. Both positive results. French business survey, better than expected. German current asset, better than expected. German IFO business climate index, better than expected. You don't even have to know what that means, right? It's a 3-star announcement, means it's a big deal, and it's better than expected. Just adding to the positive momentum today. Yeah, no, good question, Solomon. Ava Options is a separate platform where you do what's called options trading, okay? European style options trading, not to be confused with the scammy industry of binary options. Not the same thing. Real options trading. We offer that on our options platform, which you can see here, trading platforms. If you want to read about options trading, here you go, options trading. It's a whole different platform and app, very user-friendly. It has all kinds of option strategies. It actually teaches you the options trading strategies on the app. A whole different way of trading. It's kind of like, you pay a small cost. If it goes the right way, your profit is unlimited. If it goes the wrong way, you only lose what you paid. Kind of like AvaProtect, right? Okay, same style, same idea. AvaProtect is actually an option in the opposite direction of your initial trade. It's kind of the style, that's how options trading works. Okay, so if we progress to these other announcements, we see out of Great Britain also positive numbers, better than expected. Anytime it's green, it's better than expected. Okay, and other areas around the world, better than expected. US announcements, 3 in a row here, better than expected. The consumer confidence came in a little low, but the housing numbers were very positive. So overall, positive momentum all across the board with the fundamental news. So then we go to the charts and we say, okay, positive momentum. Now it's late in the day, right? You could have saw all that hours ago. And I mean, this morning we saw the positive information. We saw the positive headlines. We saw the VIX index was in the red, meaning fear was dropping. So we saw all of that early in the day. So when we look at what happened over the last 7, 8 hours, 9 hours, 10 hours, you could have already been in on that if you just did this quick analysis of the fundamentals and then went in and said, okay, I'm buying on the Dow. Every time it dips, I'm going to buy. Every time it breaks through a resistance, I'm buying, right? Or the opposite with gold. Fear is down. Gold usually drops when fear is down. So if every time gold broke a support, if you had a pending order as a sell stop, think how much money you'd have made. Just setting up your trades based on the way the wind was blowing with the fundamentals, okay? And let's walk through gold. Here was a support level on the 23rd, right here, okay? And there were some questions about what is a support level. So this was a support level. You see the price was up here on gold. This was yesterday. And you see the price hit and went up, hit and went up. So there was something here in the market keeping gold above that price. And usually when a support level, a price that the movement has trouble breaking below, usually when a support level breaks, it's with a surge, what we call a breakthrough candle, a candle that's larger than the candles that preceded it, meaning that price level was holding, it was holding, it was holding, there was support holding it up. It took some kind of big fundamental news to cause it to break. And so when it breaks, it doesn't just break by a little bit many times. What you see many times is a breakthrough candle, exactly like we see here. That's a 15-minute candle. Gold dropped yesterday from 65 to 41. What's that? $24 in the price of gold in 15 minutes, right? You say, well, okay, how do you catch it when it does that? How do you know when it breaks? How do you sell right away? Well, it's called pending orders, right? If I know there's huge news out there, I know there's talk about vaccines, I know there's talk about a transition in the world's largest economy being the US from Trump to a new presidency with Biden. We know there's a lot of uncertainty. If positive news comes with any of that, you know gold could drop. If negative news comes, you know it could go flying up. So I could have put, this is the resistance, right? Resistance, it hit and dropped, hit and dropped, hit and dropped, hit and went up, hit and went up. So I simply place a pending order here as a sell stop. If it breaks the support, it sells automatically. You can, and those of you that are new to things, I'll show you how to set a pending order like that. Sell stop, boom. It breaks the support, it automatically sells. Look at the profit you make. Soon as it consolidated, meaning went sideways, take your profit, okay? You also could have had a buy stop pending order up here. Because again, you didn't know what the news was going to be. You just know that there's fundamental news each day, and many days there's big enough news to cause huge surges in assets like gold, because it's a safe haven. If fear goes up significantly or down significantly, you can see huge moves in gold. So you got your sell stop down here, you've got your buy stop pending order here. Had this broken through up, it would have bought. It broke through down with the breakthrough candle. Boom, the sell stop sells and you're in on profit. Okay, now same thing happened again today, right? Here was the support level. After this plunge yesterday, support bounced, right? Now we're into today. you could have had your pending order below that support and above this resistance. You see the pathway, right? It's ranging. Resistance, support. Resistance, down a little bit lower than that. Let me slide it down. If I can activate my line. There we go. Okay, so there's the resistance. So support, resistance, resistance, resistance. Hits here, bounces up, support. So you've got a sell stop down here and a buy stop pending order up here. Again, just like up here, waiting for it to break one way or the other, knowing that there's huge news in the markets right now, and that if it's a breakthrough, it could be a false breakthrough. It could trigger your trade and go back. And that's why you have your stop loss just at a reasonable distance. If it breaks through and reverses back up, you hit your stop loss, set it up again. Because you're losing a lot less than you make with a setup like this. And so in this case, it broke through again below this support, would have triggered a sell stop from this price. And as you expect, once a support level gets broken, it went up and acted as resistance now. The momentum that caused it to break below that price level, whatever the news was, that's what kept it below, because that news still existed. The news caused enough momentum to break the support. So the news is still there. It keeps it below that price now. So what was support, once it's broken, becomes resistance. Why? Because of the fundamental news that caused the breakthrough in the first place. Okay? So Brian, good question. You're asking something, I didn't read it, but I already answered it, I think. False breakthroughs. Two ways to handle that. One would be have your stop loss far enough up that if it triggered, went back up, that it doesn't hit your stop loss before the bigger movement. And also, if you're saying it goes in, triggers, and then goes up and loses, that's okay. It happens, right? Or use AvaProtect. With gold, you could have AvaProtect. Could have waited it out. If this broke through, you have AvaProtect on it. It goes all the way back up here. You can wait it out now. You're covered. You paid the premium. Maybe you covered for a day. And then it comes down and ends up in profit. You didn't have to risk much at all, and you didn't have to have your stop loss get hit. So it's another way to handle trading with gold and silver and FX pairings, is to use the AvaProtect if you're afraid your stop loss could get tagged before the real movement. Or it's a false breakthrough and it goes back and just never goes the right way. Okay, you're either down the premium cost or you're down to your stop loss, and it's okay. Because couldn't I be wrong on something like this 5 or 6 times and be right once with this kind of breakthrough? And I'm okay. I could have a win percentage of 25% and still profit with this type of breakthrough. I could have 3 or 4 false signals and hit my stop loss before the real one. It's okay. It's not about being right all the time. It's about making a profit in the end. It's about potential for profit and managing the risk. It's the reason why we start the webinar talking about managing risk. It's important. You know, if you allow yourself to blow your account on one move that goes the wrong way, then you're probably not managing risk in the best way. Okay. Okay, so here's another example of a breakthrough that then held and would have been profitable. And here's a third example. This was today. This breakthrough here, you would have profited. If you looked at the headlines on investing.com, you saw the VIX index was down 2-3%. Futures were in the green. Hey, set your support level on gold, because hey, when the markets are rising, usually gold drops, right? Set your support level. Here was the first one. Even without getting in on yesterday's drop, set your support level, knowing it's positive momentum today on the markets. If gold breaks the support, you're selling. Why would I not put the buy stop up here? You could, in case it breaks up, but the news was positive, so probably gold was going to drop, and that's what happened. And even if you had put a buy stop up here, you wouldn't have lost. It never triggered, never broke the resistance, because it had downward momentum from the fundamental news. So first example here today, broke through, you would have profited. Then second example, it formed support down here, support, support. Here's your second breakthrough. And that one just is still live, right? It broke through a second time on a second support level. Here we're looking at 15-minute candles to find these scalping type moves. Support, support. you look and you say, wow, still positive momentum today. And so then you set up your sell stop pending order down here. There's the breakthrough candle, larger than the other candles, just like we said. Boom, it triggers your sell stop and down goes the market. Again, plunging after it breaks the support. Okay, 3 examples on the screen at once. Support level, when it breaks the support, down it goes. Sell stop would have profited. Ranging, soon as it broke the support, plunged down again. Sell stop would have profited. Okay, support level again, here, here. Soon as it broke the support level, boom, another plunge. That's 3 for 3. Eventually you'll be wrong, right? Not going to win every time, but these strategies work very powerfully when you first check the fundamental news and understand which way is the wind blowing. And now I'll go set up sell stop pending orders on gold rather than buy stop to try to avoid those false breakthroughs like some of you were asking about. Many times you can avoid the false breakthroughs by going in the direction of the fundamental news and avoiding trusting breakthroughs or reversals that go against the fundamental news. Okay, but you still can prepare these buy stops in the opposite direction of the fundamental news just in case there's a breaking story that reverses everything. You can have those prepared. It's okay. That's how you take advantage of that second type that we talked about of fundamental news, the kind that you just don't know when it might come. Okay, for that matter, couldn't we put a buy stop? Let me get rid of all these lines I drew. An easy way to do that, go to the objects list and just delete all of them. Okay, now I cleaned up the chart. So in the same philosophy, saying, okay, couldn't there be news that comes that's unexpected? Absolutely. So couldn't we then say, okay, if gold goes back above this old support level, which now should be resistance, right? Support, support, breakthrough. If this comes back up, that should be resistance now. If it breaks back above that, what kind of pending order would be ready to go up here in case it breaks above that resistance? It would take some big news to reverse gold back above that resistance. What kind of pending order can you put up here above this broken support that if it goes back above it, you assume, wow, there must be big news reversing gold? A buy stop, exactly, Grant. A buy stop. So I promised I would show how to do that. So if we go and we say, okay, buy stop, how do I do a buy stop? Well, first of all, let me show you on the web trader. Whoops, this is where I want to go. Let me show you on the web trader how easy it is to do a buy stop. So if I say, okay, I want to trade on gold, I want to buy, but I think, okay, I don't want to buy yet. So I just do execute when price hits. I don't have to call it a buy stop. I don't have to call it a buy limit. Just tell it the price you want to buy from. So on the MT4, you have to be more technical. You have to know, okay, if I'm programming it to buy from a higher price, then that's a buy stop. If I'm programming it to buy from a lower price, that's a buy limit. On the web trader, you just say, okay, if it goes up to X price, whatever it is, 1830, 1825, whatever that line is that we drew, I didn't even make mental note. You'd say, okay, if it hits this price, then buy. That's it. You could put your stop loss somewhere below that, and it'll tell you how much you're risking. If I say, okay, if it breaks through that level, I want to buy. If it drops back down to 1819, I'm out. Okay, I'm only risking $30. My take profit, maybe I think it could go back up to 1900. So I say, okay, take profit, 1900. There we are. I could make 375. I'm risking 30. I could be wrong 10 times and right once, and I would still profit with that type of setup. So the price level that I'm trying to find, and that's automatically a buy stop then. If I set that pending order in motion, if I look in my MT4, it'll label it as a buy stop. But I didn't have to have that technical knowledge. I can just tell it buy from this price. And so 18, 20, probably 23 is what we were talking about here. To get back above this support, right about there, 1823 would mean it broke back above. 1824 maybe. So I was pretty close when I said 1825. So where would your take profit be? If you're bullish on gold, maybe you say all the way back up here. You think it could retrace this rapid drop back up to this old support level. That might be a spot you'd take profit around 1860, just before that resistance level. So that type of setup, simple pending order, just waiting for the market to reverse, even if you don't know why it might reverse. Because you know fundamental news can come at any time that'll swing things as fast as this dropped, could swing it right back up. And usually what you see on the charts, the more rapidly a movement goes one way, if it breaks back into that zone, it can move back just as rapidly. Okay, so there's something that makes sense here about having a buy stop up here, waiting for momentum, and then buying with the momentum if that happens. Okay. Amir, good question. You're asking if there's a correction for every big movement. And the answer is no. There is not a correction for every big movement, but many times if it approaches the right price level, you do see a correction for large movements. Yeah, it's no problem, Brian. You can keep your pending order as long as you want. And let me show you how to do the pending order here. So I showed you on the web trader how easy it is. You just say buy from this price. So if I'm here and I'm saying buy on gold, I have to switch it from market execution to pending. Then I have to say what type of pending order, buy stop, which buys from a higher price. If I say buy limit and I try and put the price up here to get in, it'll tell me it doesn't compute and I could be confused, right? So I could say buy stop. Okay, if it reaches 1825 or 1824, then I want to buy, and I might say my stop loss is down at 1819, and my take profit is up here before that resistance around 1859. Okay, there's my pending order. Pick your trade size, commensurate with your level of risk tolerance and your balance, and there we are. So if it comes up and has enough momentum to break back above this old support, then maybe there was big enough news to carry it back up to the next resistance level. I'm taking profit just before this breakthrough here, because likely if it approaches this area again, you'll see hesitation to try and break that old support level to break back above that. But if it does get up here, you could see a pretty steady rise potentially, right? But look at the risk. Small risk, bigger reward. Okay? No problem. The trailing stop, you have to set after the trade opens. You can't set it in advance. Let me show you how to do a trailing stop. Let's assume this trade opened. Okay, let me do a market buy. Okay, trade is opened. Let's say it's in profit. You say, wow, I have a nice profit. Maybe the movement came all the way up here. You say, wow, I don't want to lose that profit, but I think it'll keep going. So I don't want to close it, but I don't want to risk that it could come all the way back. So you could go right click over the open trade. Here's trailing stop. Very easy. Trailing stop, pick the number of points back you want, or you could do custom. 100 points, 400 points, 1,000 points, whatever you want. Once you click OK, let me put, I don't know, 250 points. I don't want it too close or it'll trip right away. Okay, now you can't see the trailing stop. Here's my open trade. I can't see that there's a trailing stop. But if I go here, right click, trailing stop, and custom, I can see that I have that price. Okay, trailing stop, it has the order number. Okay, so I know it's there. And if I was to pick one of these preset, like, okay, 85 points. Now if I check, I can see there's a check mark. You see right there, there's a check mark next to 85. I know that trailing stop is active. Okay. The thing about trailing stops is you have to be careful. I'll just close this off. They're only client side. Trailing stop is only client side, meaning if you lose internet connection, if you log out, the trailing stop's not in our server. It's only in your system. So the trailing stop will be gone if you lose internet connection, if your electricity goes out, whatever. So if you use trailing stop a lot, you may think about a VPS connection, a virtual private server connection. $8 a month, something like that. You can find online, do a quick Google search. You'll find you can connect through what's called a VPS on a computer that's always on, rather than having to leave your computer on in your house. Okay. It's also helpful if you're running algorithms, auto trading robots, that sort of thing, to have a VPS connection. Okay, so I'll leave that pending order there. I think if it trips, there must have been big news. I slid it up just a little bit. If it breaks through and hits there, I'm willing to risk a little bit further back down. This is called widening the strike zone, right? I want to get in, but only when I'm certain that it's broken the resistance. So I slid that up a little. I want to be sure it broke through, and I want to be sure if it just comes back and tests the support, I don't hit my stop loss too soon. So I slid that down a little further away. So I need a real breakthrough to enter. And if it tests it back down, I'm still in. As long as it doesn't break all the way back down, I'm waiting for that rise. So there's my pending order. Now, market movement, you could trade the opposite direction, right? I can go in, look at 5-minute candles and say, wow, on the 5-minute candles, here's a resistance level on gold. I could do a quick scalp and sell on gold right now. I have my stop loss right here and go for a quick dip off that resistance. You see it hit here, dropped, hit here, dropped. It's testing it, red candle trying to form. So you could be scalping in one direction, selling with a short risk to your stop loss up here, and all the while have a buy position way up here in case the market completely reverses while you're sleeping. And you see now it's dropping off that resistance right now. See how easy it is to try and catch a scalp off of like 5-minute candles, off of just do the quick technical analysis. Why would we want to sell off the resistance? The fundamental news has been positive today. We expect gold to push down a little more maybe. Okay, so it's that simple to use the fundamental news to trust a resistance level more than the support level in this case, to sell off this resistance and down it's dropping rather than buying off the support down here. That's the idea of combining fundamental news with your technical analysis. And there it just dropped the dollar while I was blabbing on there. So those of you that sold off that resistance, you're already $1.50 in profit, right? A one lot position, that's $100. Just that quick, right? You know, you only need to make 1% profit a day on your account, and you're gaining 20% a month, 20 trading days typically in a month about. So small gains on little reversals like this. If you can be right 2 out of 3 times, gain 1% a day. Think about it. That doubles your balance. If you're gaining 1% a day, 20% a month, doubles your investment in less than 6 months with very small risk if it reverses. So very simple strategies. First, starting with the fundamentals and then having a preferred direction. Didn't we say Tesla should rise? We saw the headline about Tesla in the web trader. If you read the article, they're talking about, wow, things look good. If regulations come back in the US on gas guzzling cars, things could look good for Tesla. Very simple strategies. What direction did this gap when the market opened today? What direction did this gap when the market opened? Up, exactly. I asked the question 3 times just to make sure I got a response because Leonard is telling me there's no sound. Leonard, it is just you. Okay, I let Leonard know it's just him. All right, so it gapped up. What happened after it gapped up? It pulled back a bit and then went up further, right? We see it. So the gap confirmed the momentum. We knew before the market opened, and by the way, the stocks don't move until the US market opened if it's a US stock. We knew by the futures and the VIX index, momentum was up for stocks, right? Especially Tesla. If you saw that article earlier today, it was predicting that would be good. So the gap closed. Good point. This gapped up from here to here, right? The gap went from here to here, from yesterday's close to today's open. So it filled the gap. As soon as it went back into the gap, you sell if you're trading the gap strategy. That is a technical strategy to trade the gap. If it re-enters the gap, many times it refills much of the gap, and that's what it did. It went almost all the way to the bottom of the gap. This was the top of the gap. It pulled all the way back. As soon as it got near the bottom of the gap, that's the spot to buy with the direction of the momentum, which was up with the gap. Buy with the momentum VIX index was down, positive headlines for Tesla. It confirmed upward momentum with the upward gap. Once it pulled back near the bottom of that gap, that's a perfect opportunity to buy with the direction of the fundamental news and put your stop loss below the gap. Very simple strategy, taking the fundamental news overall and for Tesla specifically, and there it went. Very easy. And over the last 50 minutes, it went up more. It wasn't too late to trade, to buy on Tesla. And as a matter of fact, it's not too late still, right? Here's the resistance, boom, dropped. It just broke above that resistance, right? So you could buy and put your stop loss just below that breakthrough. If it breaks back below, you're out. If it continues climbing, you're in the direction of the momentum. Okay? Very simple strategies. Grant, it's anyone's guess whether Tesla will keep rising, but the fundamentals say yes, right? And there it goes in front of our faces. So listen, if you limit your risk, go with the fundamentals with a proper technical entry point. It broke the resistance here just now. It broke that resistance, broke above it. The direction is up right now with the momentum. Could it pull back? Of course. Then you can re-enter. You don't have to risk everything on the first try. You can re-enter. Comes back, hits your stop loss, wait for another breakthrough at a resistance level, buy again if you believe it should climb. Fundamentals say it should, right? Certainly at some point there'll be a pullback. You just have to limit the risk on the pullbacks. Okay, let's take a look at maybe one more asset. We spent a lot of time on gold. Let's look at oil. The indices, by the way, went up. We already know that. You could have found breakthroughs on Dow Jones, NASDAQ, the CAC, the DAX, the Nikkei, all of them. Look at the upward momentum. Let's just draw some lines. Okay, these are 5-minute candles. Here's a resistance level, resistance, resistance, resistance. Once it broke through, buy, right? It broke through this resistance, buy. There's a simple buy stop strategy, especially after it went down and you said, okay, now I see earlier in the day though, positive momentum, positive, the VIX index dropping. You say, let me find a resistance level. If it breaks through, I'm in. And there it went, okay? And there were multiple levels that it did that. Here was another support, okay? Support, support. You could have traded up off the support. Here was a resistance level that formed, resistance and down. When it broke through, it became support. That was another spot to buy once it broke that resistance. These are scalp moves, continually going in the direction of the fundamental news until it dies, right? Each time, very small risk. Buy stop, risk only to the underside. That one would have won. Buy stop again at the resistance or after it broke through on the support, buy up, another winner. It breaks this resistance, buy, it held, another winner. Okay, it's like a staircase up in the direction of the fundamental news. So we could look at any of the major indices. They all look very similar. Up, 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 like a staircase. There's the CAC. There's the DAX. What an alleyway to trade, right? Look at the high points and low points in the direction of the fundamental news. Every time it came to the bottom of this alleyway, buy. Buy. Two opportunities there at the bottom of this slope. Buy here, up. Buy here, up. Buy here, up. 3 out of 3. If it comes back to the bottom of that slope, you could try it again, right? Grant buy limit is a type of pending order that you program to buy from a lower price. Buy from a lower price. Like here, I could say, okay, if this movement drops back to this level here, if this drops to this price, I want it to buy. So I go DAX, pending order, what type? Buy limit. Now I can buy from a lower price. I can put this lower price. If it hits that price, it'll buy, right? So I can say 13,290. 13,290. I can put my stop loss, take profit also. There's my pending order. If it hits 13,290, it buys. That's a buy limit. okay? On the web trader and in the AvaTrade Go mobile app, you don't have to tell it that it's a buy limit. You can just say buy if it hits this price. It knows that it's a buy limit if you tell it to buy from a lower price. So it simplifies, takes away one step with the web trader and our mobile app. Whereas on the MT4, you have to be more technical and tell it that it's a buy limit. It's like the platform's dumb, right? It doesn't know that a lower price buying on a pending order is a buy limit. You have to tell it that it's a buy limit. But it is a nice platform. I don't mean to knock the MT4 and MT5. All the brokers have it, but we've made upgrades with our web trader and mobile app. So it simplifies things, takes some of the steps away. I love the MT4 for the charting on it. It's maybe more advanced than the web trader with the charting. You can draw a lot of lines, do all kinds of stuff like you're seeing us do. There's a reason why I use both. I like the web trader for certain strengths. I like the MT4 for other strengths. So it's nice to use both. So I like these pending orders today. We're headquartered in Dublin, Ireland, Grant. So I like the pending orders now, buy limits on the major indices because there's been so much momentum up. I think that there could be pullbacks on these major indices, and because there's still positive momentum, when there's a pullback to a support level, it might not break the support. It might, but the momentum's on your side. If it pulls back, that it won't break the support level. This was resistance, 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 breakthrough. Now it's support and bounces. So if it pulls back to the support, barring any negative news coming, this should maybe bounce back up off the support. So a buy limit from down here fundamentally makes sense. And technically, that's an opportunistic spot to buy right off this support level if it comes down, right? You're not going to be right every time, but if you put your stop loss just below, you're not risking much. And if it comes all the way back up, you make maybe triple what you're risking. So when you go with the fundamental news, you should at least be able to be right half the time, right? And if you're making more when you're right than you're losing when you're wrong, 50% accuracy can become really, really good. And there's no reason why you can't be right more than 50% of the time if you go with the fundamental news. Okay, I think this is a good place to stop. We did not look at oil, so I take that back. Let's look at oil. Why did oil go up? Very simple. Doesn't oil demand increase drive up price? Yes, if there's more demand for oil, price goes up. Why would people speculate that oil price would go up, that there'd be more demand? Because the markets were rising. There's momentum going into next year about the economies picking back up and recovering. So that tends to shoot oil up. Depends on your philosophy, Amir. Hedge or stop loss. If you like to re-enter once the momentum reestablishes itself, then stop loss. If you like to hang on and then unhedge, then hedging makes more sense. Both can work. There's no one right way. Both can work. By the way, you could put support, resistance. This is on oil, right? Resistance here, support here. If it breaks below this little support, you could see a little correction in oil, back down. In the meantime, you could buy from above the support with a market move, right? So I can buy on oil from above the support, take profit. I could program up here at the high, stop loss down here. If it breaks the support, then I get in with a sell stop for maybe a little correction down because that was a rapid rise in oil, okay? So I think there'll be some correction movements this evening, but I also think many of these assets will correct some and then go back in the direction of the major momentum, as long as the momentum is still there, right? So no guarantees on any of this, but I think you got a lot of opportunities for re-entries and big movements this evening. Okay, everybody, thank you for joining. I really appreciate the input and the questions. It really is helpful. And we'll be back at it on Thursday with the next webinar earlier in the day, 11 a.m. London time. All right, bye, everybody.